So, what's the big story for investors today? Well, the latest data just sent a really weird, mixed message. Inflation wasn't quite as scorching hot as everyone feared, which sounds like great news, right? But hold on, because the economy is also looking weaker than expected. So, is it good news? Not exactly. Let's break it down. Reuters reported today on the January PCE numbers. For those who don't know, PCE is the Federal Reserve's favorite way to measure inflation. Months over month, it rose by 0.3%. The annual rate came in at 2.8%, which was actually a little bit below what economists were predicting. On the surface, that seems like a win for the market. Lower inflation usually means the Fed can think about easing up. But here's the other side of that coin. The core PCE, which strips out volatile food and energy prices, still climbed by 0.4% for the month. That's a bit stickier than we'd like. And at the same time, we got the second estimate for GDP growth, which came in at just 0.7%. That's way below the 1.4% that economists had penciled in. So what we're left with is this awkward situation: softer economic growth, but inflation that still isn't perfectly under control. This creates a really tricky setup for the markets. Think about it. If inflation was just collapsing, the market would be popping champagne and cheering for future rate cuts. On the flip side, if the economy was absolutely booming, stocks could probably just shrug off a little bit of inflation. But what do you do when growth is slowing down while prices are still stubbornly high? It forces everyone to think much harder about what the Fed's next move can realistically be. Can they cut rates to help the economy if inflation is still a problem? It's a real dilemma, and this is exactly why some of the recent market rallies have felt a bit shaky. The data isn't clean enough to tell a simple, clear, bullish story. But it's also not disastrous enough to signal a clear crash either. It's just mixed. And mixed data often leads to confusing markets that jump around based on every single headline. It's a classic case of uncertainty. So, the main takeaway from today's numbers is this: the inflation picture got a tiny bit better, but the growth picture got weak enough to keep everyone on edge. It's this delicate balance that explains why investors are glued to every single data release, trying to figure out which way the wind is blowing. We're not out of the woods yet, and the path forward is still pretty murky. Thanks for watching. We'll keep tracking these numbers for you, so be sure to subscribe for more updates on the economy and the markets. See you next time.